Hey guys, welcome back to the channel. Today we're going to be talking about stock options, options trading, stuff like that. So let's get into this. So let's talk about what is a stock option. So a stock option gives an investor the right, but not the obligation, to buy or sell a stock at an agreed upon price and an agreed upon date. There are two types of options, right? Puts, which is a bet the stock will fall, or calls, which is a bet that the stock will rise. So let's talk about these two types of stock options. When an investor trades stock options, they can choose between a call or a put. In a call option, the investors, they're betting that the underlying stock's price is going to go up. A put, it's a bearish position. You're betting that the underlying stock is going to go down. Options are purchased as contracts, which are equal to 100 shares of that stock. When a contract is written, it determines the price that the underlying stock must reach in order to be in the money, known as the strike price. An option's value is determined by the difference between the underlying stock price and the strike price. Okay, so let's understand some of these different options, right? So there's different styles, right? There are two different styles of options, American and European. American options can be exercised at any time between the purchase and expiration date. European options, which are less common, can only be exercised on the expiration date. So, the expiration date. Options do not only allow a trader to bet on a stock's rising or falling, but also enable the trader to choose a specific date when they expect the stock to rise or fall by. This is known as the expiration date, right? The expiration date is important because it helps traders to price the value of the put or the call, which is known as the time value. And it's used in various option pricing models, such as the Black-Scholes model, right? The strike price determines whether an option should be exercised. It is the price that a trader expects the stock to be above or below by the expiration date. If a trader is betting that IBM will rise in the future, they might buy a call for a specific month and a particular strike price. For example, let's say you're betting that IBM stock will rise above $150 by the middle of January, right? Then you might buy a January price $150 call, right? Contracts represent the number of options a trader may be looking to buy. One contract is equal to 100 shares of the underlying stock. Using the example we just used, right? A trader decides to buy 5 call contracts. Now the trader would own 5 January $150 calls. If the stock rises above $150 by the expiration date, the trader would have the option to exercise or buy 500 shares of IBM stock at 150, regardless of the current stock price. If the stock is worth less than $150, the options will expire worthless, and the trader would lose the entire amount spent to buy those options, or what's called the premium, right? And the premium is determined by taking the price of the call and multiplying it by the number of contracts bought, then multiplying that by 100. So let's take that example we've been using. The trader buys 5 January IBM $150 calls for $1 per contract. The trader would spend $500. However, if a trader wanted to bet the stock would fall, they would buy the puts, right? So options can also be sold depending on the strategy a trader is using, right? Continuing with the example we've been using, if a trader thinks IBM shares are most likely going to rise, they can buy the call, or they can choose to sell or write the put. So in this case, the seller of the put would not pay a premium, but would receive the premium. A seller of 5 IBM January $150 puts would receive $500. Should the stock trade above 150, the option would expire worthless, allowing the seller of the put to keep all of the premium. However, should the stock close below the strike price, the seller would have to buy the underlying stock at the strike price of $150. If that happens, it would create a loss of the premium and additional capital, since the trader now owns the stock at $150 per share, despite it trading at lower levels. So, a little note that I want to tell people about trading options. I would recommend, if you want to trade options, you should do what's called playing with fun money. So you should have, your savings where you have 3 to 6 months of living expenses in there, and then any money you have, you should be maxing out your retirement accounts. But if you still have money left over, right? You still have, like, let's say you have an extra couple $100 a month left over. You can start a separate account, right, and call it fun money, and you can do things like doing options, right? Doing puts and calls and all these things, right? It's extremely, extremely speculative, and I would say for most people, and by most we're talking 90% or higher, you will lose money trading options, right? Do not put a lot of money into trading options. Now, if you have the time to research and get accustomed to like a specific sector, right? Like maybe you're just really, really into the financial sector and you know all about the banks and like all of that, right? If or whatever sector you're into, right? You go into that sector and you do research, you see how it moves up and down. What if, you're not going to be able to 100% know anything, but if you familiarize yourself with it enough, you might be able to win more than you lose. But I mean, we're talking a lot of research, right? Most people I know who trade options, they lose money trading options. Like you might get, like as a perfect example, I have a friend who started trading options, and he was like, "Oh man, I made $100 this week. I made $75 this week, $100." And this went on for like 2 months. He was making like $100 to $150 every week. But after that 2 months, I kept telling him like, "You need to stop. You need to stop. Like slow down, slow down." And he was like, "Oh man, like I'm doing so good." And he put money into one, and he bought his option, and he lost big, and almost all of the money he gained in those 2 months was gone instantly, right? Like he lost all of it, right? So if you're gonna trade options, you really need to do the research. You really need to keep your emotions in check. Don't let your ego get the better of you. If at all, I would say just don't do it, right? It's just really, really speculative, right? You just don't know. It's just there's so many things that you can do, right? Whether you're buying options, selling options, you know, there's just options trading is just it's not for everybody, right? That's the best way I can put it. It's for a very, very minute amount of people who really, really know what they're doing. Right? And my perfect example is this. I like this guy on Twitch, and he makes YouTube videos as well. But his name is the Stock Guy, right? Or Stocky. And he tells everyone, like, look, don't trade stock options, right? Don't do what I do, right? And he's like, this is what's called being a degenerate, right? Because it's not the way to make money, right? It's the unsafe way, right? Because even if, it's gambling, right? It's like going to the casino and gambling, right? You're going to buy a call option to allow you to buy shares at a specific time, right? Or you're going to put options to allow selling of shares at a specific time. But you don't know how much a share is going to go up or down in a specific amount of time, right? You just don't know. Like let's say you were playing options before the pandemic of 2020 hit, right? you probably lost a crap ton of money, right? Or the exact opposite could have happened. You could have got incredibly lucky and just made a crap ton of money. Like, who knows, right? Like, who saw Bitcoin becoming as big as it is, right? Not a lot of people. Who saw Tesla to become as big as it is? Not a lot of people. But the people who did bet, right? You got to think, they bet on it going up. 99% of those people, right? They didn't bet on Tesla going up. But the people who did probably won really big. But I bet you there were probably more people who bet that it was going to go down, and they lost a lot, right? So hopefully you guys enjoyed this video. Maybe, I don't want to steer you away from trading stock options. I just want you to be aware of how risky it is and know, like the basics of what everything is in stock options, right? I really hope you guys enjoyed this video. Go ahead and give this video a like. Subscribe to the channel if you guys enjoy this. And until I see you guys in the next video, y'all be safe.